There's one tech stock out there in the market right now which presents such a great opportunity that I think we could see a 2x or more in a very short amount of time in this stock right here. I'm really excited to get into this, but first, if you're new here, I'm Austin. I'm a co-owner of clubmusictweet.com. I'm a stock market investor, of course, and I'm a shareholder of this company that we're talking about today, and a proud shareholder at that. Channel's sitting at like 300 something subscribers right now. Thank you if you're one of those people. If you're not one of those people, click that subscribe button. Help us on our goal in the short term to hit that 500 subscriber mark. It means a lot to me. As a thank you for doing that, here's a picture of both my beautiful cats, Luna and Millie. Luna's the brown one, Millie's the gray one. They thank you for subscribing. All right, let's get into this. So this stock has a market cap of $76 billion. This is not a tiny company. It's not some speculative company that you've never heard of before. I bet every single person who's watching this video has heard of the company and has probably used their products before in the real world. This stock is trading so cheap that you would have to go back more than 6 years ago to get this stock at the same price you're getting it today. It's absolutely insanely undervalued. It's trading at half of its 5-year PE average. And the company's in a way better spot today than it was 6 years ago, than it was 5 years ago, than it was 3 years ago, etc. and so forth. So the company we're talking about here is PayPal, and this is ticker PYPL. This is, like I said, a $76 billion market cap, and as of the time of recording this video, 68.86 per share. It was up about 4% today on some nice news. We'll get into that a little bit, but I want to show you some insanity first. I would have to go back to September time of 2017 to pick up shares of this company at the same price it is today. That's insane. Has PayPal made no progress in their business since 2017? Of course that's not true. They've made so much progress on their business. Not only does this company have the 2 of the top 3 financial related apps in all of the Apple App Store, but they also own this company called Braintree. So they bought Braintree from this guy named Brian Johnson who had made this. Braintree had acquired Venmo, and then PayPal went ahead and acquired Braintree all the way back in 2013. So it's been a decade since PayPal has not just been the PayPal legacy business, but it's been kind of this 3-headed monster. PayPal, Braintree, and Venmo. The 2 that we definitely know for sure as a consumer are PayPal and Venmo. And then the non-consumer product is Braintree. Braintree is more of their, think of Stripe, if you know what Stripe is. It's a white labeled product where they can do your payment handling for you without the brand name of PayPal kind of being shoved down the consumer's throat, right? So it's a white labeled product. It doesn't say PayPal all over it, but they're able to use all their technology and all their relationships with brands and go ahead and offer this service that's not PayPal branded, that still does payment handling, payment networking, etc. and helps out with the back end of all these businesses. And just to name a few off PayPal's website, Uber, StubHub, Dropbox, GitHub, Yelp, OpenTable, Poshmark, Casper, etc. So many massive companies that are going ahead and using Braintree as their back end and their payment handler because they already probably had that relationship with PayPal, and they can go ahead and integrate this pretty easily without having to switch over to a new company for their payment handling. Braintree is growing at a massive 30% year-over-year growth. That's amazing to see as the growth of the PayPal legacy business starts to drop a little bit, which is natural over time. PayPal's legacy business is kind of dropping all the way down to 6.5%, which is still respectable growth. It's not like that's anything to sneeze at. 6.7% growth is respectable, but the 30% growth from Braintree is really, really where the opportunity lies as it relates to growth moving forward. Speaking of growth, what we want to see in terms of growth is that revenue growth, yes, is still occurring, and we're still getting nice 10, 12, 13, 14, 15% revenue growth, etc. But we want to see the net income growth being more than the revenue growth in the ideal scenario for a stock that we're trying to invest in. So that's one thing we would like to look for moving forward as quarters tick on for PayPal, as they move out of kind of this unfortunate time they're in with the stock price being depressed so heavily. But you and I can go ahead and take advantage of that while the market starts to respect PayPal again as they start to put up quarter after quarter of great numbers. We're looking at the PE ratio over the last 5 years. The 5-year average PE for PayPal is at like 55. So 55.17 is what I've got here on Y charts. And then the current PE ratio is 29.19. So that's about half of the 5-year PE. So if we just look at that metric alone, if it just catches up to its 5-year PE average, not the tip top of where it's been over the last 5 years, just the average. And we've got a baked in somewhere between 80% return and 100% return. So that would be a 2x just looking at the PE ratio alone, but it gets better. We know that stocks move on net income going up over time. If net income is getting in a better spot quarter in, quarter out, the stock price is going to reflect that in the long term. So when we talk about net income for the most recent quarter, 2.705 billion is what we had. In order to find a time period in the past where we were somewhere around 2.75 billion, we have to go back to mid 2020. So let's check out the stock price for mid 2020. June and July of 2020, this stock was at about $180 a share, when the net income was the exact same as it is today. This is a disgustingly undervalued asset, and I feel like it's just stealing money to buy PayPal shares right now. So why is the stock down so much right now? One of the big reasons is because of fear over competitive threats just killing the legacy business, and PayPal not being able to keep up with Visa, MasterCard, Apple Pay, Amazon Pay, Shopify Pay, etc. and so forth. All the different competitors in the e-commerce space that want to help out with payment handling. Yes, this is a very competitive space, but with total transaction volume of 2 trillion and the projected 2024 to be 2.3 trillion, and then if we move out all the way to 2027, projected digital payments are going to be all the way up to $3.5 trillion only 4 short years from now. That's almost a double up in the total amount of digital payments that are going to be handled. And that's our best estimate. We could blow that out of the water. We could be well above 4 trillion in 2027 in terms of digital payments. There is plenty of space for multiple players in a particular industry who can offer very, very similar products. There's Walmart, there's Target, there's Ingles, there's Harris Teeter, there's Kroger, there's Whole Foods. There's so many different grocery stores. Would you make the same argument about different grocery stores? Well, we're not going to invest in this one grocery store because there's other grocery stores. Yeah, there's other grocery stores. There's competitors in every single industry. There is plenty of money in the digital payments to go around. PayPal fully understands this, and they understand that their legacy product, the PayPal branch specifically, is maybe not what's going to be the biggest driver of growth for them moving forward. That's why they're not investing all of their time and energy and efforts into it. That's why they're putting their time, energy, and effort into Venmo and Braintree. Venmo is still growing at like a 50% clip year over year, and then Braintree is growing at 30%. So of course, Venmo is the consumer side, and then Braintree is the commercial side where you can work with different businesses, business to business situation. So in my view, they've got it handled on all fronts. They have a plan. They're going to execute this plan. Speaking of the plan, another reason that this company has been disrespected and beaten down so hard recently is because they have a CEO transition coming. So their CEO is exiting. He made it very clear that he was exiting and that they're on a hunt to find their new CEO. So there's a lot of uncertainty around PayPal's future as it relates to who is going to be the new CEO, what's going to be the vision, how are they going to sell the vision to shareholders, what's the deal here. So there's a lot of uncertainty around that. Anytime there's uncertainty around a stock, anytime there's uncertainty around the economy, anytime there's uncertainty period, stocks are going to be depressed a little bit. So we shouldn't be super surprised that the CEO transition is hurting the stock in the short term. Let's get into some numbers here around PayPal. That's enough conversation about the specifics of the business model, but let's talk about some numbers here. PayPal's trailing PE ratio is at about a 28 right now, with the forward PE being less than half of that at a 13. That is amazing. We love to see a forward PE that's substantially less than the trailing PE, and at less than half, a 13 forward PE, that's stealing money. That's amazing. We love to see that. Price to sales, 2.72. That's great for a software company. That's great for a payment handler. As we move over to analysts' best estimate based on the company's guidance, they've got the company doing 7.5% growth this year in terms of revenues and about 9% growth next year in terms of revenues. And what I was talking about earlier, we like to see net income increasing at a higher percentage than revenue. So let's check out and see if that's true. We take this year's numbers, $4.95, and next year's numbers, $5.65. Best guess from analysts. They could come in and beat that number substantially, but let's just assume they do exactly those numbers for 2023 and 2024. That would be 14% earnings growth while we see the 9% revenue growth. We always like to see net income expanding more than revenue is expanding, because that lets us know the margin expansion opportunity is not dead. This is not just a legacy company that's not growing anymore. This is still a growth beast. It just happens to be beaten down, and people are trying to view it as a super deep value stock, which is great for us as investors because we can go ahead and buy that deep value stock with the insane growth that this company has moving forward. That's why I think it's a great opportunity, short term, mid-term, and long term, which I can't always say about every company. That's why I'm so excited about PayPal. Let's take a look at the balance sheet for PayPal real quick. Total assets of $77 billion and total liabilities of $57 billion. So they almost have the same amount of total assets as the entire market cap. Asset to market cap ratio is nearly a 1-to-1. That's awesome. We love to see that. 10 billion of the current assets are cash and cash equivalents. So this is cash and then some short-term investments. I would assume these short-term investments are bond investments, debt investments that are paying them some interest as they move forward through these higher interest rate environments. That's what I would love to see. And then their cash and cash equivalents are sitting at 7.1 billion. So payables and receivables are almost equal. So we're just going to kind of nullify those two things in our head, because if we look at the payables and receivables, they're pretty much equal. So after that, we need to go to current debt and capital lease obligation. The current debt and capital lease obligation, are you ready for this? $0 of current debt, $0 of current capital lease obligation. That's amazing. There's no debt on the books right now, nothing hampering PayPal in the short term as it relates to debts. So next we look into the long-term debt. Long-term debt is at 10.4 billion, and they have enough money on the books, enough cash and short-term investments to pay off all of their long-term debt today and still be in the positive on their assets line of the balance sheet. Do I think they're going to do that? No. Do I think they should do that? No. Let the long-term debt ride, service it as you need to. But I, as the investor, can sleep well at night knowing that in some sort of black swan event, PayPal would be totally fine and they could pay off all their debt. If all business stopped today and they made no more money starting tomorrow, they could still pay off all their debt. Of course, neither of those two things are going to happen, but it is nice to see. We don't like to see a big cash to long-term debt ratio, and definitely don't like to see a big cash to current debt ratio. And with PayPal, that current debt is 0, like we mentioned a second ago. Looking at the cash flow statement, there's 2 things on here I want to bring our attention to. Number 1, repurchase of shares. So it says repurchase of capital stock, and then right below that, free cash flow. 2 things that I think are very important for us to look at as investors. Number 1, each quarter over the last 5 quarters, they've been buying back somewhere between $1 and $1.5 billion worth of stock, returning that capital to shareholders. Because remember, as a company buys back shares of its own stock, the total number of shares outstanding drops. And since share price is determined by market cap divided by total number of shares outstanding, even if the market cap stays in the same spot, we as the investors are getting a nice price appreciation on those shares because the total number of shares outstanding is going down, which makes the share price go up. So that's good for us as the investor. This company is very committed to returning equity to shareholders, returning value to shareholders through share repurchases. Some companies choose to do that through dividends. Some companies choose to do that through share repurchases. PayPal's version, share repurchases. And they just announced today that they're going to be working with KKR, which is a European company, to go ahead and buy their buy now, pay later loan portfolio. They're going to buy it now with all the value it has right now, and they have an agreement to buy those loans moving forward. So this is going to be nice price appreciation for PayPal because they said, hey, we're going to take some of that money from the proceeds and we're going to actually increase our share buyback. They had a share buyback, $4 billion of total stock repurchased, and now they said, hey, we're going to bump that up to $5 billion of total stock repurchased for 2023. So that's even more value returned to the shareholders through those share buybacks. We love to see that. Looking at the cash flow statement one more time, they have been free cash flow positive somewhere between $1 billion and $1.5 billion every single quarter for the last 5 quarters, and many more than that. So PayPal's in a great spot, free cash flow positive. EPS machine, undervalued on a PE metric, undervalued on a price to sales metric, undervalued when we look at a much less robust version of PayPal having the same amount of net income at almost 3x higher than the stock price is today. and lower than the 5-year average PE by about half. So I feel like the minimum that we get over the next 6 to 18 months is an 80% return. And the maximum could be way, way, way higher than that. Maybe I'm wrong and we get much less return. Maybe I'm very, very wrong and PayPal has a horrible next 6 to 18 months. I could totally be wrong. Anything could happen in the stock market. PayPal's business could crumble. Do I think that's gonna happen? No, I don't think that's gonna happen. I think PayPal's gonna have a great next 6 to 18 months and many, many more months than that. But that's, I think, where we're gonna get a lot of the price appreciation and the money's gonna come flooding back into PayPal and give it some more respect like the stock market used to respect PayPal. We'll see if that plays out over time. I know one thing for sure, I'm gonna be a buyer of PayPal for many months to go in the future, at least all of 2023. Bare minimum all of 2023, I'm gonna be picking up PayPal shares. My cost basis is very, very low on PayPal, but I'm okay if the stock keeps on climbing. I'll actually bring my cost basis up a little bit, which I normally don't do all that often unless I see some real opportunity, some real value opportunity in a stock, and I see that in PayPal. Let me know if you're a holder of PayPal. Let me know if you're trying to sell PayPal, if you're trying to short PayPal, whatever your opinions are, if you think it's a trash company, if you think it's doomed, or if you think it's the best company in the world. Let me know. I wanna hear about it in the comments. Let's get some debate going on down there. If you made it this far, you clearly liked the video, so like that video, subscribe, and we'll see you next time.